So look, it sounds quite interesting. In a low market, something like low rates, a market that's come off a lot, there might be a lot of people that are interested in this. Who are the main people that you see investing in through this kind of structure? What are the main investor types that you see come across your desk, and where does it fit?
Yeah, sure. I mean, I've done this myself. I did this a couple of years ago, and I've actually got an application. And this is something I'd say to you as well. If you've got any interest, get your application in early, because you don't want to be seen as a great opportunity to buy and needing to apply on that day, because it can take, depending, if you get all your documentation to us, it might take a week or so, a few days to set it up. So I've got mine set up, ready to go, waiting for an opportunity this end of financial year. But I did one a couple of years ago, and I was in the process of buying a home. So we had a significant amount of cash sitting there for the deposit. And I wanted to be in the market. I thought there were good things going on in the market, but I didn't want to touch that cash in case I needed it. So I was able to leave that cash sitting there, go take out a GI 100%, not putting any cash down, use my monthly salary to go towards that, and get into the market. So we see that a lot where people have, whether they've got cash sitting there they don't want to touch because it's for a specific purpose, but they want to be in the market and experience the upside of these growth assets, particularly, in the market now, people are getting quite excited with the fact that we've had a major correction. Might be that somebody has a lot in property, all their money in property, and they want to diversify. So they want to diversify into equities, but all their money's tied up in property, or all their money's tied up in. We see this with executives of companies. You might have an executive who gets shares. They might get $2 million worth of shares in their company. They're all locked up in it. They can bring that $2 million worth of shares, depending on if the stock's on our APL. They bring those stocks over to us. We can then release that equity, so they get the $2 million back to invest in the share market and build a diversified portfolio rather than being stuck in one asset.
Yep.
We see it very commonly in young professionals, guys who are starting to make good money, but they haven't really built a big capital base behind them. So they know they should be in the market. They want some tax-effective investments. They want to get that exposure and be in the market. They know they can afford to manage it on the monthly repayments, but they just don't have that $100,000 sitting in the bank account to get in. And we see it looking in professionals, 40, 50, even right up to pre-retirees, guys who are looking for, particularly around this time of year. We probably do, to be honest, about 80, 90% of our inflows over this month of June. And it's part of the tax planning strategy. So, it forms part of a smart tax planning strategy, while also getting a genuine underlying exposure to the market and growth assets and trying to make some profit.
Yeah. So when you see clients, if you've got on the highest marginal tax rate with those tax deductible expenses, you're able to claim something in the 40s back, as opposed to if you're a lower income earner, you're able to claim something in the 30s back. So that you get that little bit of extra benefit where you are on the higher marginal tax rate, but it doesn't necessarily have to just be for those people. The amount of the different kinds of people that you just explained is, fantastic. I understand how it applies to all those people, but for those people out there who are wanting to get into this and might want to buy a property in the future, I guess it is borrowing, so it is going to be assessed if you are going to borrow something in the future. So just make sure you talk to the right financier about it. What you said about the application and getting applications in throughout the start of coronavirus, there was a lot of people that wanted to go and withdraw on margin loans to get into the stock market. However, talking to people from the banks who are in these departments, they were too busy making margin calls to be able to process new applications. So if you didn't have your application set up, you weren't moving. So you're right. Getting on the front foot, getting everything set up to be ready to pounce whenever the time's right.